Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. The UK referendum to leave the European Union dominated the news for the entire week, at first with polls showing it wouldn't happen and later the polls becoming too close to call. On Monday, U.S. crude oil gained almost 3% to close at $49.37 a barrel, driving up the energy sector. The U.S. dollar index traded lower by about 0.5%, and the pound surged more than 2% against the dollar. Markets ended the day with the Dow Industrials up 129 points. On Tuesday, Fed Chair Janet Yellen testified before Congress, stating that a UK vote to leave the EU could have significant economic repercussions. She also said the Fed needs to remain cautious with its approach to monetary policy, and it is carefully monitoring data from the labor sector. She's still optimistic that the labor sector will continue to improve. Markets ended the day basically unchanged as many investors stayed in cash. On Wednesday, existing home sales for May rose 1.8% to an annualized 5.53 million units. The EIA petroleum status report for the week ending June 17th dropped 900,000 barrels, marking its fifth consecutive weekly decline. However, this drop was less than expected, and U.S. crude fell 2.5% on the news. Markets ended the day down slightly. On Thursday, jobless claims for the week ending June 18th fell 18,000 to 259,000, close to a 43-year low, and the flash manufacturing PMI moved up to 51.4 compared to the previous month's 50.5. Voters in the UK headed to the polls, and markets rallied strong with the Dow Industrials closing up 230 points. On Friday morning, the results of the UK referendum were released, and the UK will be leaving the EU, with 52% of voters wanting to exit and 48% wanting to stay. Gold rose more than 8% on the news, and the British pound plummeted to a 31-year low against the dollar, while the dollar index was up as much as 3%. The process of withdrawing from the EU will be slow, anticipated to take 2 or more years, and there will be periods of volatility since this has no precedent. Markets opened Friday morning down sharply, with the Dow Industrials off more than 500 points. Now let's take a look at some stocks. Red Hat shares fell more than 4% Wednesday after market as the open source software solutions provider reported first quarter earnings of $61.2 million or 33 cents a share, an increase from $48 million or 26 cents a share from a year ago. Red Hat also revealed it will buy back up to $1 billion of its stock. Shares of Tesla Motors plummeted after the electric car manufacturer announced plans to acquire solar energy company Solar City for about $2.8 billion. Wall Street analysts see the deal as a negative for Tesla. Oppenheimer funds and RBC Capital Markets have downgraded Tesla and removed previous price targets. Shares of Adobe Systems fell despite an earnings beat. The software company announced quarterly profit of $244 million or 48 cents a share on sales of $1.4 billion. However, analysts expected adjusted earnings of 68 cents a share. The longtime leader of the popular retailer Macy's, Terry Lundgren, will step down as CEO next year. Recently, Macy's has been struggling to adapt to new consumer demands. Jeff Jeanette will take over as CEO in 2017. FedEx reported a better than expected fourth quarter. Despite beating earnings, shares fell after the report because revenue was slightly lower than expected in its freight section. In addition, FedEx suffered from unfavorable currency exchange rates. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.